The housing market just went from bad to worse, especially for Florida. So today I'm breaking down the biggest real estate stories of the week and where the housing market looks to be heading for the next 6 to 12 months. So let's get started. Hey, for those of you that don't know me, I'm Rick Harrison with MVP Realty here in Southwest Florida. And on this channel, I bring you the latest insights and information to help you decide if now is the right time to make your move to paradise. If that thought's crossed your mind, you're in the right place. So subscribe and tap the bell to stay up to date on the latest information, keeping you ahead of the curve. All right, now let's dive into today's big stories. All right, so today I'm bringing you 6 stories. They come from a variety of sources, but these 6 stories in order kind of tell the story of where the market is heading and what's going on right now, what's most important, especially for the really more of the Florida housing market, but a lot of these stories cross over throughout the nations. The first one comes to us from Bloomberg, and this is something that pretty much everybody already knows, but lots of U.S. homeowners want to move. They just have nowhere else to go. A couple of the things here that really stuck out, the highlights are one, obviously the high prices going on right now, and then also the critical shortage of listings. Those two things, coupled with mortgage rates that have more than doubled from record lows of just a couple of years ago, they're forcing countless Americans to put their next moves and other major life decisions on hold. Some of the interesting stats here, more than 9 of every 10 U.S. homeowners with mortgages, or 46.1 million people, have a rate below 6% according to the June report from Redfin. Even though builders are rushing to step up production, that really can't alone help and really close the supply and demand gap. The most largely absent group here is obviously homeowners who are willing to sell. And that has a lot to do with the fact that a lot of people forget that homeowners that want to sell, they have to buy too. So they're facing the same problems that buyers in the market right now are facing, which is obviously high prices, high interest rates, and low inventory to choose from. Even if you wanted to move out of your home, the chances of you finding what you're looking for are pretty slim unless you're working with, like I've mentioned several times in the past, a real estate agent who is a home finder who will go out and find you things off market or unlisted properties. But there's not a lot of real estate agents that do that. So you're kind of slim pickings for that. The other thing, the market's logjam is unlikely to significantly ease up anytime soon as mortgage rates face more upward pressures. And before I go into the next story, I did want to just shoot over here to TradingView and go over the bond market. So for those of you that have followed me, you already know this, but for those of you that are new to the channel, the bond market really is the leading indicator of where mortgage prices are going, more specifically the 10-year bond market. And that is what we're looking at right now on this chart. Now, the white lines are lines that I've drawn, and these are what are known as bull flags. Basically, this is over a couple of years, but each one of these bull flags, when a bull flag develops, the flag that's heading down on that downslope, that is usually going to be a breakout to the upside. So right now we're looking at over the last year, we've traced the 10-year bond. You can see it zigzagged up in this channel and then it broke out right here. Now, if this breakout plays out the way it should, based on the charts, this is probably going to head up here to the 5% range. If that happens, we're looking at 8 to 8.5% mortgage rates coming in the near future. And it's already touched down on the line and it came back up. So I do think that this is going to play out the way this bull flag is showing, but we'll have to see. So I think mortgage rates are going to be heading even higher. All right, on to our next story. This comes from Zero Hedge. How much more will home builders have to reduce prices to increase sales? Now, this is a little bit of I guess, a deceiving title to this, because the fact that builders are lowering prices is not an indication of the fact that they're actually lowering prices on homes they've already built. The fact is that they are actually starting to build less expensive homes because they're reacting to what's going on in the market. So median new home prices are plunging. That's just based on the charts. But if you go down here, they do admit that existing home sale prices remain stubbornly high, which is why builders are now one of the best options for home buyers right now. And they do provide quite a few incentives, such as closing costs, rate buy downs, things like that. In contrast, home builders have passed on the lumber price discounts that's come way down over the last year and a half, and now build smaller homes, which is something we haven't seen for quite a while, but I think they're reacting to the fact that the market's changed and more people need smaller and less expensive homes than what they've been building, which is more luxury homes. Just to give you a kind of peak to trough declines comparison, in the Great Recession, there was a 22.2% decline. Right now, we've already seen a 16.4% decline across the nation. So that's not just in Florida. But 16.4%. And in another story, we're actually going to compare that. It's actually almost down to the Great Recession, a 24% decline this year. So we're looking at really, we've already had a correction. So I think where prices are right now, it's going to be staying where they are for quite some time unless something drastically changes. The other story here is the great wealth migration. So this is adding into specifically the Florida housing market. New York, California, we all know those states have really kind of been losing a lot of people. But where are they heading to? No surprise, Texas and Florida as preferred destinations. Just to give you an idea, the amount of wealth that has migrated out of those states, California, number one, lost $343 million. New York, almost $300 million. We have a couple others that are popular places, Illinois and New Jersey especially. Lots of people are moving to Southwest Florida from those areas. Combined, you're looking at over $700, $800 million migrating out and into the two top states, which is number one, Florida, $12 billion migration income, and then Texas, $10 billion. So lots of money flowing into Florida right now. That means lots of people. And on top of that, we have low inventory. So that's going to keep inventory low and keep prices high for quite a while. All right, this next one comes from Bloomberg as well. A 5% U.S. mortgage rate is seen as a tipping point to unlock supply. So we've all been wondering, where is supply going to come from? We aren't seeing it coming from foreclosures, but the tipping point that has been found, at least by the data so far, is a 5% interest rate. If interest rates go below the 5% rate, that's where we'll see more homeowners start to say, okay, this is affordable, or at least somewhat more affordable. I'll be able to sell now and I can buy my own house. Only 20% of mortgaged homes meet that criteria, though. That's according to Zillow. U.S. homeowners are nearly twice as willing to sell if their mortgage rate is 5% or higher, but 1 in 5 mortgage homes meet that criteria. So there's not a lot of inventory that could possibly come from those types of homeowners. For those who have a mortgage rate of at least 5%, 38% said they're planning on selling their homes. And then just 21% of holders with rates below that dividing line said the same. Also, prospective buyers have sought out new construction instead since inventory on resale market is so low. On top of that, 80% of mortgage holders reported having a rate of less than 5%. And about 90% have a rate of less than 6%, Zillow said. So as you can imagine, with rates over 6% now, probably the motivations of homeowners to either refinance or sell right now is very, very low. And that's why we're not seeing any more inventory come on, and we're actually seeing inventory decline over the last several months. This is the market update from Redfin. As I've been saying last several videos, home prices are up 3% year over year. In our area, specifically Southwest Florida, it's up about 2%. In some areas, it is 3%, but on average, that's about the going rate right now. Prices are increasing despite lukewarm demand. A measure of requests for tours and other home buying services is down 3% from a year ago, and mortgage applications are down 23%. So even though everything's fallen off a cliff here, home prices are staying elevated, and that's because of the inventory, really. New listings are down 22% from a year ago. Total number of home sales is down 17%, and pending sales are down 15%. Because of the lack of inventory. All of those things are also contributing to the fact that's what's keeping home prices up. And then our final story here is really the whole thumbnail that I had there, the slow burn. So we're in a slow burning housing cycle right now. And this is kind of going to tie everything together, all these stories together. And from a global average rise in home prices of 16% in 2021 to a 6% fall in 2022. So as you can see this chart, we were up 16%. We're down to negative 6%. That's a 22% change there, which is exactly in line with a great recession, or the housing recession in 2008. So we're right in line with that. So we've already had our correction in the housing market if these stats stay the same way. So from here, I see prices continuing to rise until something really critical happens. It would have to be mass layoffs, or there would have to be a ton of foreclosures coming to market for some reason. The third final thing that could happen would be mortgage prices would have to go way down. But the way the bond market's been running over the last 2 years, I don't see that happening anytime soon either. So at a micro level, they expect this housing cycle to be volume-led and price constrained. Affordability is about as bad as it's ever been, which lowers demand. However, since supply is tighter than demand, house prices are likely to stay high. The market is likely to remain subdued because of a lack of forced sellers. So nobody really wants to sell right now with the prices and the mortgages the way they are. And then this implies that the monetary policy is probably going to stay tighter for longer since inflation sensitivity is lower. The main thing in this article is this right here in this green. The risk now is that supply, or the volume, and wages, the affordability, will actually need to catch up to prices rather than prices sinking in demand. Now, we talked about this over a year ago, but that's really that death spiral that we were talking about. We have to keep paying workers more money to continue living in the standards that they currently have, and that just forces prices up. So it's a death spiral, really up the wrong way. But lastly, the housing note includes a global scorecard of housing exposure to rates, which shows that the US is the least sensitive, while other areas like Canada, Sweden, Australia rank the most sensitive. And that's because we offer a 30-year fixed mortgage here in the US. Those other countries, a lot of them have 10 years as like their biggest, their biggest mortgage that they allow. And a lot of them are variable rates. They're not fixed like ours. So that's why we're the least sensitive, because we have longer terms and we also have fixed rates versus the variable rates in a lot of the other countries. All right, now let's slide over to the Southwest Florida's market update, just to give you insights into what's going on in our market specifically. First, we'll start off with the interest rates. Those went from 6.45 last week to 6.7, almost 6.8 this week. And I believe as of today, those are up even higher, closer to 6.9%. Bank rate had that average going from 7.15 to 7.27. That's up 12 points on the week. The southern part of Southwest Florida, from Cape Coral down to Naples, we went from 737 listings last week to 684. That's down 8%. So we're seeing the same trends. Inventory is declining. New listings coming on is still declining as well. The number of homes sold, 600 to 602, really no change there week over week. And then pendings went from 754 to 817. That's up 8%. So we are seeing when those rates went down for that week and a half to 2 weeks, about a couple of weeks ago, we did see more people enter the market. And I mentioned that in the last housing market update. So that is what those pending sales are. More people entered the market, and we're seeing more offers going in because they locked in lower rates. The inventory breakdown: single family homes, we lost 34 units this week. And for condos, we lost 23 units. So we had a net gain of 7 last week, which was pretty dismal. But now we have a loss of 57 this week. So we're seeing less homes come on, more homes go off the market. Multifamilies, really not much of a change here. We gained 3. And then foreclosures, that's down 5. So we're not really seeing any significant increases or decreases here in inventory. As far as total sales go, 499 over the last 7 days. Out of that, 218 were all cash, and that's 43%. That really didn't change, but the number of sales and cash sales are both up. All right, for the northern part of Southwest Florida, Punta Gorda up to Sarasota, new listings went from 595 to 586. That's down 2%. Not too much of a change there. Solds, however, this is a lagging indicator as to what happened 30 to 45 days ago. That is up 14%. And then we had pendings go from 664 to 688. That's up 3%. So not a huge significant change in the northern part as far as buyers entering the market. Price decreases, 831 to 706. That's a pretty large decline, but that's down 6%. And then the inventory breakdown for this area: single families went from 4924 to 4971. That's up 47 units. And then condos up 13. So we had a net loss of 116 last week. We have a net gain of 60 this week. That's good news for the northern part. And then multifamilies and foreclosures, again, not much of a change here. We've been going back and forth, a couple lost, a couple gained in both sections, still not really contributing anything to the inventory. And then total sales, 581, that's up quite a bit. But out of that, cash sales were down, surprisingly. That was down from 48% to 43% this week. So less cash buyers in that market. As always, we've got a lot to keep an eye on, and that's exactly what I do in this channel every week. So don't forget to subscribe. And if you have questions, please don't hesitate to reach out to me directly, as many of you do. My contact info is in the description. Thanks again for watching. I hope to see you on the next video. But until then, stay safe, stay positive, and more importantly, stay free.